Hello, everyone. Thank you, all of you, for joining us today on New Year's Eve. Obviously, looking back at a great 2024 and looking forward to what we really want to talk about today is just positioning yourself and your portfolio for the year 2025. Um, you know, Again, a little bit of F Street. I'm Nick Young. I'm a director of development and general counsel here with the team. Again, F Street, who we are, alternative real estate investing firm, focused on long-term investment and growth for our investors. We always say we're planting money trees. That's what we're doing today. And that's what we want to talk about is planting those money trees for 2025 and beyond and making sure you're setting yourself up and your goals for the next couple of years. So again, alternative real estate firm, we really have our three major areas. We have our industrial development portfolio, our multifamily portfolio, and our private debt fund. Those are three of the areas we're in. Obviously, there's a lot of other great alternative investment opportunities out there. But we really want to go over setting yourself up and how F Street can help and other ways you can get yourself set up in the new year. So going through the team, again, I'm Nick Young. This is the rest of our development team here on the development side of the business and the acquisition side. And then going over our portfolio, as mentioned, our multifamily portfolio, our industrial portfolio, as well as really just an overall portfolio. Going back over our 2024, we had another great year, really excited about all the opportunities we went through. We closed 3 large multifamily development deals for a total combined of $86 million in development and another 4 industrial opportunities combined for $58 million. So really excited about what 2024 was and what's coming up for 2025. So that's where we really want to go through it with you today. Of course, I'm not a financial advisor. We're not a financial advisory firm, but we really want to help you guys set up yourselves going forward and leave it open to questions throughout the day today. As you're setting up for your new year, hopefully setting up resolutions to be financially prepared on top of your weight loss or dry January, or whatever you want to set up for the new year. So first and foremost, be proactive. I mean, at F Street, our motto is get shit done. And I think that really applies here on your financial portfolio. Be proactive, be ready to plan, be ready to capitalize so you can take advantage of those strong opportunities, what you can do to take those steps. And I think a lot of it is really those small steps, getting accredited, building those relationships, ID what you need to do for your portfolio, for your family, for your futures. And that's identifying the right positions on things on top of not just your allocations to equity, bonds, and treasuries, but alternative assets, real estate, private lending, those as well. So again, first and foremost, understand where you're at. Take a look at your portfolio, identify your assets, identify where you want to allocate going forward. That includes things like using self-directed IRAs and preserving tax advantages. I know a big thing we've been working with our investors on in 2024 and going forward to 2025 is identifying 1031 opportunities. So deferring those through exchanges or starker exchanges, like we like to call them. That's always a great advantage you can take advantage of when you're selling a real asset and moving it into a like kind asset to defer those taxes. Obviously, one of those big things going into 2025 that we want to make sure you're ready to take advantage of is a new administration. Obviously, new administration is going in. We're going to have new policies. We're going to have new opportunities, especially with the total shift. So we want to make sure that you're ready. So understand where your portfolio is at, how you want to direct your investments, whether that's through a self-directed IRA or through cash or however else you want to do it. And that, again, comes to building relationships. Obviously, we'd love to work with F Street, but there's also other syndicators out there, other financial advisors out there that can really help you identify what's best for you, your future, and broaden your opportunities going forward. So obviously, we'd love to have you continue to work with us at F Street, but we strongly recommend you also reach out to other groups as well to see what fits your goals and what your opportunities. And first and foremost, get accredited. So one of the big things for F Street is on our platform, all of our investments are SEC registered investments. So we do require an accreditation, which is the typical criteria. A income individually of $200,000 or between a married couple of $300,000 or a $1 million net worth excluding your primary residence. There's also other exceptions to this with series registrations and FINRA registrations, but these are the general ones. And for us on F Street, that's really just for us getting your badge. So on our website, it's completely free. All you have to do is register online at fstreet.com, get registered on our site, and that way you can be ready for opportunities, because we have a lot of opportunities throughout the year where they fill up very quickly. I'll use an example. In December, we closed on an industrial acquisition, a great value opportunity that has immediate day one cash flow. We filled that deal in less than 2 weeks with over a $3 million raise. So to make sure that you're ready to take advantage of those, just make sure you're ready and can be able to move that going forward. Again, talking back about going through your goals. What's your risk portfolio, the type of deals you're looking for? And I'll go through it in a minute here, but we obviously have different types of deals and different types of opportunities. As I mentioned, our typical deals are multifamily developments, acquisitions, or industrial acquisitions or developments. However, we've also really had a lot of opportunities that are different. Like in 2024, we offered a couple of promissory notes, one for basically built to suits for specific users, and another was a value add acquisition multifamily deal. So those deals are quite unique and they fill it very quickly. So again, understanding what your goals are, your mix, and the type of opportunities you want to be ready for to make sure your portfolio is ready in the new year. So again, as I just mentioned, it's really those different type of assets. There's different growth potential assets. There's always diversifying into different investment opportunities beyond equities, the bond market, and treasuries. Because as of right now, everyone's seen equity markets are the highest they've ever been in years, actually in history, of course, even with the little blips over the last few weeks. Interest rates and treasuries at the highest they've also been. But obviously, those things change. Things go up and down. The great part about investing in different alternative assets like real estate, like a lot of what we do at F Street, is there's different opportunities that you can take advantage of with us and with other opportunities. And again, this is what I mentioned. Just know your risk tolerance. Certain deals have certain risk profiles. I'll go through those, like just quick examples. Multifamily development deals. It's a development deal. There's always a different risk profile, but it's a higher return profile. Our deals, typically, we're dealing with tax incremental financing, so you're getting tax advantages. There's also different tax advantages that you should be aware of and talk with your advisors about how you can utilize those. One of the big ones we have is on, for instance, the industrial deal we acquired a few weeks ago. Our investors in that deal are going to get the sped up cost segregation tax benefits from that depreciation here on their K1s that they'll be receiving before April 15th of next year. So that's one of really the big advantages that you can also take advantage of in alternative assets like real estate, and making sure you can adapt those strategies with you and your team. So again, how you want to do it, whether that's cash flow needs. A lot of our industrial acquisition deals have immediate cash flow. Multifamily ground up deals also have cash flow, but that's usually deferred for a 24-month period while the project's being constructed. The other one is the private debt fund. Obviously, our private debt fund is an immediate 10% note that's paid on like a monthly coupon rate. So really, again, seeing what's flexible for you, your family goals, and what meets your long-term values. So again, I want to go through the opportunities of 2025, some of the opportunities we're looking at here at F Street, and other things we want to look at. Again, I'm going to leave it open to questions as well. I know we have one quick here that I'll be happy to answer. Yeah, so question is what can we do to plan for 2025 tax benefits and tax planning? So going through that deal I just mentioned, another one is, we have the intention of acquiring anywhere from 10 to 15 industrial assets in 2025, as well as approximately 2 to 4 multifamily ground up opportunities, as well as just other opportunities that we come across that we feel are good for our investors. A good way to stay ahead of that is obviously talk with our team. There's different ways to take advantage of those different types of deals. Each one has a different depreciation schedule. Certain assets do more than others. But for instance, for the acquisition deals that we're acquiring, those we're going to be depreciating upfront. So if we buy a deal in 2025, we have approximately 2 to 3 deals that are currently negotiating contracts with. When we acquire those deals, we will be doing a cost segregation study and depreciating those for the year 2025. So if you have, say, a large capital gain event or some sort of large ordinary income where you are active, it'd be great to talk with us on how you can take advantage of those. It's a good question. So again, if you have questions, please be happy to answer them. We want to make it interactive. It's New Year's. You can open the champagne here in a few hours. Otherwise, I won't judge you if you guys start now. Talking about our opportunities. So again, our ground up development deals, all of them are usually aiming for a higher IRR, usually 15 to 25% is typically where we're landing. We look at these as long-term growth opportunities because all of our deals that we've been doing at least over the last year and going into 2025 have some sort of large tax advantage through the municipality or through our personal relationships, our deals we've been working on for 1 to 2 years as we lead up to those projects. And those, again, no immediate cash flow, but typically we're seeing around month 24 is when we start to see cash flow. Because we'll usually aim for a refinance out of the construction loan and start distributing cash flow right away. So that's one of the good parts about those is it's developing that money tree. So that's a long-term growth that we continue to see going forward. One of them that we'll talk about is our next phase of Oak Creek. Oak Creek so far has been an extremely successful project for us. We closed the first phase of 199 units back in 2022. That deal provided its first distribution back at the end of Q3 of 2024 and a second distribution here at the end of Q4 in 2024, and we'll continue to distribute quarterly in 2025. So that's been a really exciting project. The next phase we closed on a few months ago, which was Summit Phase 1. And we're going to Summit Phase 2 here sometime between March and April. Again, the way we structure these deals, it's a preferred return because there's no cash flow but for the first 24 months typically. So you're accruing that preferred return. In this deal, it's 8%. And then after you receive all of your preferred return and return of your capital, that's when there's the 65-35 split in favor of the investors. So again, another great opportunity, really excited for. This one, again, we're targeting approximately 18% IRR. With a 1.87x multiple on a 4-year hold. Again, we just pro forma numbers, but great opportunity. As mentioned, we'll likely see between 2 to 3 more of these deals we'll be offering in the year 2025 as we continue our pipeline. As mentioned, these deals take a few years to line up, and because of the TIF or whatever incentive we're negotiating with these, we're really deferring them for the long term. Yeah. So question was, can you show why this deal or why the confidence of Lakeshore Commons? So going back to this opportunity, so Lakeshore Commons has been a fantastic opportunity. The first phase leased up well beyond expectations, and the other parts of the project, the single family homes, the townhomes have all been very successful so far as well. So we want to continue to build on that, and it's really been evidenced by residents loving it. Really, we're outperforming the rest of the market significantly, at least in the Oak Creek and the South Milwaukee market. So we really want to see this area continue to grow, and we're also gaining more optimization utilization. Once we start MF3 here, the next phase of Summit, there will be over 350 units in that area, which is, I think, a great number. We can really utilize better property management people because property managers will be able to be more allocated between the 3 projects, including the townhomes and the single family homes. So great question. Again, please ask more questions and happy to go through them. The other thing I want to talk about is the industrial acquisitions. Industrial deals, obviously a little bit different than you see on your multifamily deals. Most of our industrial acquisition deals are deals we're acquiring and there's immediate cash flow in place. We look at it as we're buying risk in a lot of these deals. A lot of the deals we've been looking for or targeting, like the ones we have under contract, have immediate cash flow where there's maybe value to be made through they have below market rents, so we can increase those rents to meet the market when they do their next renewal, or they just have a long-term lease with long headway, so we can really return more capital for our investors. This mixed with the multifamily makes a nice balanced approach. We also have the industrial development projects, Appleton being a good example where we've had phase 1 through 3. And we'll be eventually looking at phase 4. Those are, again, great opportunities where those can see more upside. Once those are fully leased, they're built on spec, but once they're leased, we can really return a lot more of that capital and provide more cash flow to our investors. As an example, this was one of the deals we looked at back this year that we acquired earlier, just showing how the cash flow works. Having a 7% preferred return, and this is just based on what the lease actually shows. So it's something we know we're going to be distributing on a cash basis. This deal, for example, we acquired the second week of December, and we already made our first distribution. I believe that distribution already went out yesterday. So always stable returns, something we see where, again, that we're going to see hopefully a lot of upside over the next few years as well as we really bring that property mark to market. And we'll be identifying, as we mentioned, 10 to 15 deals in the year 2025, if not more. If we find more great opportunities, we'll continue to search those as well. And always, we have the private debt fund. So for investors really seeking a stable 10% annualized returns on a 1099 basis, the debt fund won't have some of the tax advantages like depreciation you'll see from the acquisition deals or the ground up deals, but really cash flow flexibility. There's, of course, the lockout period, but for this, we have just the stable 10% cash flow, always great for any retirement portfolio and anything you're doing as well. So those are really like the three opportunities we want to talk about. I wanted to go through what a private debt fund looks like. So $100,000 investment, you're going to see your monthly coupon rate at 8.33. And again, we talked about the call period, 90-day call period, 2 ways from each of us. So a different investment pro forma than with a 1099 versus the K1 that you'd be getting from our acquisition and development deals, but a great opportunity for really that stable, consistent income and growth. So kind of going back to why we're here today, taking control of your next year. As I mentioned, priority one is getting shit done, doing it, aligning your portfolio up front with what you're aiming to do and what your portfolio wants to be going forward, not just for 2025, but years beyond. So build those connections, build those relationships, explore different opportunities, and just be ready. Because at the end of the day, this is about you utilizing long-term wealth, finding other tax advantages, using self-directed IRAs, identifying 1031 opportunities, and just expanding your network to grow into these different opportunities. So as mentioned, first step with F Street is just get your badge, get your accreditation. Very simple on our website at fstreet.com. Get you signed up, have those opportunities ready. So when we release these opportunities, as mentioned, it's first come, first serve. We always want to make sure there's room for our investors, but as they fill up, there's always so much opportunity for us. And as mentioned, always work with your financial advisors and your long-term planning goals. We're here to help, and we want to make sure you continue to identify our opportunities and your opportunities. So let's invest together. I'll open it up for questions. Otherwise, wish everybody a happy new year and a prosperous new year. So good question. I wish I had a crystal ball. The question is how will the new administration change as it comes to alternative investments and alternative assets? That's a great question. I mean, part of the Trump administration coming in is going to create a lot of changes. We just don't know how quickly they're going to come. One of the areas that's been talked about a lot is opportunity zones. We've aimed at a couple opportunity zone deals in the past. Those are quite unique. That program actually expires in a matter at the end of 2026. So that's one of those opportunities we're hoping will be expanded. That's something where if you had invested in an opportunity zone, in an opportunity zone fund, you can defer your capital gains for a certain period. And after a 10-year period, you actually get basically a full step up in your basis. So huge tax advantages to investors. Another one is bonus depreciation. So currently under the TCJA, bonus depreciation drops from 100 to 80 to 60 to 40 in 2025, and then 20 in 2026 and 0 in 27. So obviously there hopes to be some expansion there, but who knows what the new administration will come up with. We're always aiming to stay on top of it to see what areas we can take advantage of for our investors that make the most sense. Good question. So there's a question about, can you talk about the townhouses in Oak Creek and what that's expected to look like? So there's 2 townhouse developments in Oak Creek. The first phase was for sale units. Those have really sped up. I believe there's been 3 sales just in the last month. So those have continued to be successful. We're excited to see those run off over the next likely 12 months based on the anticipated sale schedule. Also North Townhomes, we call them Ivy Townhomes. It's another 28 townhomes for lease. Those we started leasing only in October, is when those were delivered. And we already have 13 of the 28 townhomes leased. So ahead of schedule. We always want to see on those lease-up schedules spaced out because we don't want all of our leases in winter. So in Wisconsin, it's always difficult to lease all the units in November, December, because you don't want people moving in. So we target to space those out a little bit so we have move-outs at different times as well. Best opportunities in Wisconsin are it's usually that April to July, August period. That's really good. That's when people are moving or families are moving, and those are family style units. So great question. Other questions? Yeah, awesome. So no more questions. Again, I want to wish everyone a very happy new year and a prosperous 2025. Again, connect with us, meet with us at fstreet.com, get registered, get your accreditation, and look forward to talking in the future.